All right, what is going on, everyone? Welcome to our July 21st, 2023 edition of This Week in Crypto. I am Brian, your host for this show. As we navigate the markets, I'll be running solo, and our founder, Maxim, will be back joining me beginning next week. So we'll have the two of us to bounce some analysis off of each other and answer questions together. For now, I will be running the show on my own and will be looking for any questions that pop up. So feel free to fire them away at any time, whether it's clarification on a certain metric, a certain news story that maybe needs some extra context, or obviously an asset that you'd like a further look at that we may have some ability to check out live here on the show. So thank you everyone for tuning in. Obviously, we don't want to be giving investment advice on this show. As you know, this is all about analyzing markets and giving some proper context as to what is going on the on-chain and social side of cryptocurrency at any given moment. With that said, let's look at what's been going on over the past week. It's been a strange one, to say the least. We've kind of been seeing this trend throughout the past month of large caps, particularly Bitcoin, XRP, even Bitcoin Cash, going on these big runs, especially in late June or early July. But here in mid-July, it's kind of transitioned into an every man for itself situation where a lot of mid caps, small caps, semi-large caps, they're kind of starting to go on runs now, while the top caps, Bitcoin and Ethereum, Cardano still, Solana, like they're starting to fade. It doesn't mean it'll continue, but at least for the past week, that's been the case. Even Litecoin, which is just 2 weeks away from its halving now, they've kind of petered out a bit. While you can see Chainlink, for example, has been on a big run. Fantasy Gold continues to go on a crazy run. Maker, the big story of the past week, it's a little under the radar because it's not talked about a lot, but plus 28% over the past week is a pretty nice return for those who have been patient in the ERC20 asset. You can also see synthetics going on a big run as well. Now, don't be deceived. The majority of assets are still down over the past week, and the big reason for that, of course, is the fact that Bitcoin has dropped 4.1%, and it's retraced back below 30K, just barely at the time of this video. By the time this video ends, it could very well be back above 30K, or it could be sinking down a little further. But obviously with Bitcoin starting to cool off, and it's been kind of flat, obviously, as most of us have known, in that 29.5 all the way up to 31.3K range for the past month or so, maybe past 3 weeks or so, ever since the ETF explosion happened in mid-June. So it was a matter of time until we saw maybe a slight downswing that brought down many of the altcoin markets with it. But like I said, there are plenty of exceptions right now that go even beyond just this top 100 chart. Chainlink just yesterday went on a big run, and as of right now, if I just check out my price chart really quick, yeah, so like Dogecoin, for example, is currently on a bit of a mini pump. It had been pumping about 7% in the past hour, hour and a half. It's now seeing a slight retrace on that, but it's still ahead of the markets. So meme coins like Dogecoin and even Shiba are showing some slight decoupling signs at the moment. That means keep a special eye out for Pepe, keep a special eye out for even Dogelon and some other meme coins out there that may not necessarily go on their own solo pumps. This could be just a Dogecoin thing, but usually when one meme coin starts to see some variance from the rest of the altcoin pack, others can tend to follow historically from what we have seen. So with that said, I mean, we see Dogecoin as the one big exception over the past week. It's currently up 7%. The exception, of course, being among the top 20 or so. And then we see Chainlink and the others I've named. But overall, the market cap for all of crypto is down about 1.7%. Not a huge deal, but what's even more interesting is that the volume, the actual trading volume of all assets is down 47%. So huge evaporation of the amount of trading going on in crypto just over the past week, at least compared to the week before it. So obviously there was some inflated volume going on that was still lingering as a result of all the ETFs a week ago, and obviously even more so the week before that and week before that. But it does seem like the euphoria is starting to dry up, and focus has kind of shifted to a few isolated assets, XRP being the big one from earlier in the week and last week as well. Obviously, I think it was the 12th or the 13th of July when the news came out that XRP is deemed to be not a security by the SEC. And that is a huge deal with the asset no longer being restricted here in the US, at least, by the regular laws that are associated with securities. That means more ability for it to be invested in comfortably without tax regulations, at least to the extent that many other securities have to deal with. And of course, exchanges get a big boost from being able to list it without the normal monetary holdbacks that can normally be associated with securities. So XRP still is one to watch. It's been essentially as flat as can be, down 0.05% over the past week. But I've seen just in the past few days that there has still been plenty of volatility with it. So maybe we'll see a little more of a retrace. Maybe we'll see a bit more of a pump. But if you're looking for an asset that is going to continue to be a little more tumultuous in both directions, XRP undeniably should be one, at least throughout the rest of the month. Chainlink, of course, made some big news. We put out a couple tweets over the past week. Let's take a look really quick at what we put out. We had an insight about Chainlink that was posted about a day ago. And there's a big increase in whale transactions right now, as well as just overall trading volume. And the market involvement is something that is increasing right now and should be a welcome sight for those that have been patiently waiting for an asset that's mostly looked like this and trailing a lot of the big gains, right? Because Bitcoin and Ethereum, they've kind of gone like this ever since the beginning of the year, whereas Chainlink has just been stuck in the mud. But obviously, right after this article, and props to our staff member who identified that there was some bullish divergences popping out, we saw a 20% jump on Thursday, today being Friday. So that was a pretty nice sight, and we haven't really seen much of a dip on that 20%. So this looks like it could hold for a little while going into the weekend with Chainlink back above $8 or so. Let me find the exact price really quick. Yeah, 809 at the time of this video. So obviously being at just 689, 690 at the time of the article, if you were paying attention to our metrics or paid attention to our insight itself, you would have gotten some nice payday from this. And that's kind of our goal at Santiment, giving objective analysis on some bullish divergences that are popping out and letting you choose whether you'd like to trust our metrics or not. And you can see right here, obviously trading volume spiked to about a 3-month high. Yes, on earlier in the week, I should say Wednesday. And then whale transactions, similarly, big spike. I believe this was the highest spike of the year so far here in 2023. So whales were definitely starting to interact on the Link network a lot more commonly. And then look at the shark and whale holders as well. You can see 10,000 to 100,000 Link holders have been increasing quite steadily. That's people holding anywhere between $80,000 to $800,000, give or take. And then the red line being $800,000 to $8 million. Look at the accumulation in supply that they've really been making over the past, 6-7 weeks or so. That's a big deal, and not something that we had been seeing much. Obviously, the red line was going backwards before then. The yellow line was mostly flat. But when you see an asset suddenly do this with their key shark and whale tiers, especially like anywhere between $100,000 to $10 million, depending on the asset, that's where you can really capitalize if you're identifying it and you're seeing that prices are suppressed like they were here in mid-June. It's usually a matter of time until the asset makes some sort of solo pump. Maybe it's only 5 to 10%. In this case, it was a quick 20% jump from the rest of the markets, even with Bitcoin declining for most of the week. So yeah, that was awesome to see, and I definitely recommend checking it out on our insights page. And then we made another Chainlink finding right here. So yeah, we saw a big social volume spike yesterday, where this was obviously the day that we saw the big plus 20% pump, a day after the article came out on our insights page. And so the interest spike in Chainlink is kind of a mixed bag. Obviously, a lot of it is going to be associated with FOMO, and you can see that the social volume spike happened right after the big plus 20% pump, not before. So that usually is an indication that people are reacting to the price, not anything fundamental where they've suddenly had a change of stance in Chainlink. So typically, when we see a social volume spike like this, it's going to be associated with a bit of a cool-off period because FOMOers generally are what self-propagate that top forming, and then you see prices kind of declining a little bit after. Doesn't mean we're going to go back to 750 or even under 750, but it could mean that social volume might be a bit overheated, and ideally we'd like to see things kind of get back to what they were in early July here as an indication that the crowd has given up on the pump. They're back interested in XRP or Doge right now, whatever the latest story is, and that can quietly allow Chainlink to continue climbing to $9, $10, and beyond. But we actually don't want to see social volume spikes like this, indicating that the mainstream crowd is suddenly trying to pour their money into Chainlink. It's a false perception that everybody in the crowd is suddenly that it's a good thing that the crowd is suddenly pouring their money into an asset. If the novice traders out there are the ones saying, wow, I love this pump and I can't wait to ride it and keep, seeing the wave of my money go up along with the price, that's usually when the tops form and you see the opposite happen. You generally want to see assets that are underlooked and under the radar as the ones that are going to be making you the most coins, coins as in dollars. So if I go to insights here, speaking of that point I just made, look at how Ethereum is currently under the radar, as my title indicates. I wrote this article yesterday, and you can see that the price of Ethereum compared to Bitcoin, since late June, it's up about 5%, a little bit underneath 4.8% or so. So it is actually gaining on BTC finally. It's not a huge gain. Obviously, it was at a much higher level back here in early June. And then, of course, Bitcoin went on that big, massive run, leaving a lot of altcoins behind. So mathematically, when you see a big Bitcoin pump like that, assuming the Bitcoin pump doesn't just come right back down, which it hasn't, it's still sitting around 30K, that's when altcoins tend to benefit and you start seeing profits from Bitcoin pouring into altcoins. And yes, there have been assets that have been doing much better than Ethereum and having much higher returns, XRP and Link being the two prominent ones. But Ethereum mathematically does have some argument that it is going to be gaining on Bitcoin for the rest of the month, even going into August, depending on the health of Bitcoin, of course, being able to keep altcoins propped up. And one thing, based on the point I just made about being under the radar, is that Ethereum in particular is seeing very low social dominance. the percentage of discussions related to the number 2 asset is extremely low at the moment, pretty much at the lowest of the year, with just this 1 week here in mid-May being the only lower point than where we're at right now. So with discussions of Ethereum under 7% at the moment, which is rare, it would mean that if there is a pump or a push toward 2000, it would be done with less resistance and less mainstream FOMO than we'd normally see. And yes, I mentioned that $2,000, that mark, is a big psychological support. Yeah, right here. And when that $2,000 threshold is crossed, assuming it does cross, which I would presume it will, based on the trajectory of things, that's when traders will suddenly start to change their tune. And you'll likely see a lot of forums and platforms on Reddit, Discord, Telegram, and Twitter, and even 4chan starting to talk about Ethereum being back over 2K. You've got to get your money in. It's only a matter of time till it's at 3K. And all this FOMO narrative starts to pop up again. But for now, because it's under 2K at about 1895 at the time of this video, there can be some sneaky good bullish upside while the social dominance is low and the 2K FOMOers are kind of dormant and looking at other assets at the moment. One thing that could prevent it from happening is the fact that there is still a pretty decently sized amount of profits being taken compared to losses. About 1.4 to 1 ratio right now of profits compared to losses. And that's in spite of the downswing, minor downswing of about 4 to 5% of Ethereum's price over the past 10 days or so. Ever since the top, it got over 2,000 temporarily and then fell off. And then the other thing, of course, would be the average trading returns, where the Z-score, which is combining multiple timeframes, short, mid, and long-term traders, it's still up a little bit. We want it to be around 0 or under 0 as an ideal time to buy in. And it's above 0 at the moment. It's not at a huge point. 1.0 would be a big jump, but 0.32 is high enough where there's a little concern still. And the main reason is because long-term traders are still up at about plus 15% on their returns. Those would be active addresses over the past 365 days. So yeah, we have short-term traders, the 30-day, they're about break even at the moment. Excuse me. I felt that sneeze coming on. Sorry about that. So 30 days about break even, but long-term, of course, being at plus 15% means there's still a bit higher risk than average on the long-term scale. If this gets flushed back down to 0 or even below 0, then you're looking at a pretty ideal time to start adding on to your positions. But like I said, there's no reason that prices can't continue to climb, even if average trading returns are a little above, or even profit taking is a little above normal. And then finally, on a good point, long-term wise, the supply and exchanges just continues to stay extremely low. It's still sitting at below 9%, which is historically good, other than this tiny little blip here about 4 days ago. This is the lowest right now that we've seen Ethereum's supply and exchanges since its genesis. It's never been below 9% since its opening weeks of being introduced back in 2015. So that's a great sign as well. Now, with that said, why don't we focus our attention on Bitcoin for a moment, and then we'll do a little more altcoin analysis. I do have some other models I want to show off and give you guys a glimpse of where we're at right now. So over the past 6 months here, let's make sure we're switching to live. Here we go. We'll actually switch to 3, get a little more zoomed in here. Okay. So beginning with transaction volume, really not much to say. It's actually kind of been sinking back down to about the same levels we saw in April. This doesn't, as you can see, have a huge impact on price on a day-to-day basis. But generally speaking, more on-chain transaction volume over time is a good thing, and declining is a bit concerning. So since that big wave here on, where we started to top on the 23rd, we saw one more big top on July 13th. It's mostly been a gradual line downwards, and we have to be a bit concerned about that. This isn't a big drop off. It's kind of a fade as transaction volume has dried up a little bit. And even on the circulation side, it's kind of looking similar. Circulation being the red here, ever since the big price rise, it's starting to drop. I mean, this line's a bit of an exaggeration. You look at this average trend line, and it's a better indication. It's just a slight tick down. But if we go to our NVT model, Bitcoin's circulation is back in bearish territory after at least peaking into semi-bearish territory last month. So this red bar here indicates we're just not quite getting enough unique tokens moving around on the BTC network to justify the market cap staying this high. And if things don't change in a hurry, then the lack of utility could push prices down a bit more until people start to react to maybe another drop down, get FUD, and that's where those bottoms start to hit and you can buy back in again comfortably. But there's no guarantee of that, of course. And utility is just one of many metrics that we have to pay attention to. While we're here, we can look at the Ethereum side and see that it's pretty much in a similar boat with right now our fifth straight. Oh, actually, you know what? This is only up to April. So if I just simply drag my formulas down over here, I believe. Yep. I made this model about 4 years ago. And by the way, it's available to anyone on Sandbase Pro. I'm actually not sure why it's not filling in. Let me see really quick. Let me see if I can solve it quick. Well, I'll look into it later. Not a big deal. All I can say is that Ethereum's kind of going to be in the same boat with mostly bearish divergences showing at the moment. But moving back to Bitcoin, something we can be a little happier about. This line is a little faint, but you should be able to make it out. Ever since late May, the 30-day trend of daily active addresses has started to really pick up. So even with unique tokens moving down, the unique amount of addresses are actually moving up. And right now, the average amount of active addresses is up to about 960,000 addresses per day, which is pretty nice. It's kind of getting close to where things were when things were really healthy in late April. And that's when we were seeing, I'm looking here, 980 to 995,000 daily active addresses per day. If we get back there and we're approaching 1 million per day, that's a really good sign for Bitcoin's future again. So I like to see that the amount of unique addresses are moving in the right direction once again. And on the MVRV side, we talked about Ethereum already. Bitcoin's in a pretty similar boat though. 365-day active traders are actually above what Ethereum is at. Ethereum was at plus 15%. Bitcoin is at plus 22%. When you start getting above plus 25, plus 30%, like we were saying here at plus 31% on June 23rd, that's when you really are seeing some top signals forming. And you want to, at least based on historical evidence, you want to start taking a bit of profit based on what the math is dictating. Now back at plus 22%, still high. Ideally, we want to see something like what we saw back in December as I zoom out to the last year. Look at how November and December, after the FTX collapse happened in early November, huge negative swings in both the 30-day and the 365-day MVRVs. Obviously, we would love to be buying in here at 15K to 16K with the MVRV clearly indicating that it's a great time to get in based on historical evidence. Now that they were both, or they were briefly at the end of June about a month ago, that's when you wanted to really start to calm down and temper your expectations. At least we can say the 30-day MVRV is in the negative once again, but I'd still be a bit concerned with the 365-day up above 20% still. Definitely a semi-bearish signal on the MVRV end. Let's zoom back in so we're not so zoomed out. 3 months, funding rate wise, we're still kind of flat. This might be a better look here on our funding rate model. If we look at Bitcoin, it's pretty much right at break even on the funding rates, not really any significant short or long bias at the moment. There are a few altcoins while we're here to point out. Band is seeing some heavy shorts, so it could be worth taking a look. If Band goes on a rise and it liquidates these shorts, that just provides rocket fuel for the asset price to go up further and potentially break out from the rest of the altcoin pack. 0x has a minor divergence on the short side. Compound, same thing. Elrond and Hedera Hashgraph. These are the notable ones, just in case you're looking to counter trade against all the shorting going on. Now, remember that people short these assets for a reason. Maybe they're seeing something fundamentally they don't like with bad news coming out about the team. I have not looked into these 5 assets and why they would be shorted right now, but usually it's just based on price. Sometimes the price pumps a little bit. Sometimes people are just taking a shot based on something they've seen or they don't like the project. And if it's an emotional decision, that's where you can really cash in on their mistake if the short gets liquidated. If it's a fundamental decision and the asset actually is in trouble, and the founders are potentially the ones shorting, then you got to be careful. But those are highly rare. A few more things on Bitcoin, and then we'll get over to whales. Speaking of whales, we can look at the amount of transactions whales are making, and they're actually looking pretty promising. This spike here on the 17th was huge, over 2,500 whale transactions, most since July 5th. And the overall amount of 100K plus transactions, you can clearly see there's a little bit of a rise in the amount. That's just a rough average indicator that I'm eyeballing. But yeah, there's more $100,000 plus whale transactions than there were 3 months ago by a large margin. And if we go back to like a year, we can see that it is starting to recover back to what we were seeing, here in mid-November. This is, of course, when people were reacting to the FTX collapse, but more whale transactions usually is not a bad thing, given some context, and we'll look at that context in just a moment. I'll come back to this and this and this. Mean dollar invested age. It's continuing to climb once again, so dormant activity that we were kind of getting excited about in late June. It's kind of flattened out here, and it looks like it's kind of resuming upward once again, meaning dormant addresses are not budging with their coins too much. Ideally, we would like them to be moving them around more, like we were seeing here in mid-March as the price was really starting to boom. But for now, long-term wise, mean dollar invested age isn't really showing much benefit. Supply and exchanges, though, is long-term wise being at just above 6%. We can be pretty happy with the fact that there's a very limited amount of Bitcoin on exchanges that can be sold off, meaning the amount of damage done to BTC is a bit limited based on a big whale sell-off that could happen. I'll come back to social dominance in a moment, and weighted sentiment. We still need a bit more time before things start to be relevant after the big Twitter API change that happened. So let's look at the ratio of on-chain transaction volume and profit to loss. I know that's a mouthful, but it's a really important metric that I've always loved. Looking at the last 3 months, let's see what's been going on for the top cap assets. So we talk about an indication of a top happening. And obviously the big story was XRP. This big orange spike was showing that tons of people were taking profit after the big news about the SEC granting XRP as a non-security. So that was an indication that the asset may be hitting close to a top. Right behind it is Ethereum, which we mentioned was seeing some big profits in mid-July and still is seeing some big profits now. The rest, LTC, Cardano, and Bitcoin, they're about break even last week and still about break even. The exception being Cardano, which is really starting to show some FUD once again. As of now, this is the biggest loss take that we've seen in about 3 months. Give me just a moment. I'm going to blow my nose really quick so I'm not just talking through this congestion. 1 sec, guys.
Okay, let me use that chance to share with you what requests we already have. Stellar, so XLM, would be one, and a comparison between ETH and staked ETH, so Lido staked ETH. Brian should be with us again any second.
All right, back, guys. Thanks for waiting. So I heard the suggestions, Balresh. You mentioned Stellar, staked ETH, and Lido. Oh, interesting. Okay, we can take a look at that toward the end of the call. Before we do that, let's take a look at some of the big whale tiers and shark tiers that are going on right now, combined with stable coins, because that's always going to be an important aspect to look at. So beginning with Bitcoin, as I isolate it, notice how the supply and exchanges from the key sharks and whales have been coming back down just a tad. We need to be a bit concerned about that. Obviously, they got quite interested after the news, or even right before the news. I'm sure many of them got a little bit of an inside scoop before the official announcements with BlackRock and the other ETFs began to be announced. But you can see the big accumulation in mid-June, and it even continued after the price was pumping. So that was a great sign. But see how they started to kind of flatten out here right as the first local top happened, and they were already taking profit going into the one final big spike that happened up to 31.5K on July 12th. And it was rapidly coming back down, not rapidly, but mildly coming back down as the Bitcoin and the shark and whales from Bitcoin were starting to take profit. It's not down a lot, right? We're still up at about 67.0% after being at 66.6% 3 months ago. So that's a pretty significant amount of extra Bitcoin that sharks and whales are still holding compared to 3 months ago. And then, of course, we have to factor in what's going on with stable coins. And this is actually a bit concerning. The biggest stable coin, Tether, has really started to fall. Those sharks and whales that were holding anywhere between $100,000 to $10 million are down to about 37.9% held of the asset after being at 40.2%. So you're talking about a 2.5-ish% drop in the supply held in Tether. Obviously, you can see that the Tether here, when it dropped, it coincided with the increase in Bitcoin held. So whales and sharks were obviously exchanging Tether for BTC, but now that BTC is falling, we would hope that Tether starts to rise, but so far it hasn't. That's a concern. That's telling me that there is some mild dumping going on, especially with the increase of whale transactions, like we saw in the previous chart. There's a higher amount of sharks and whales interacting as their hold on Bitcoin is lessening and hold on Tether is lessening. Now, it's not all bad news. We do see that USD coin has been on a pretty good run here, even in just the past week, 5 days to be specific. There's been a pretty decent increase where they were holding 37.7% and they're now up to 38.4%. So a nice little 0.7% increase there. BUSD also looking pretty good. That's a really healthy looking orange line, indicating that sharks and whales are very interested in holding Binance's native stablecoin right now, getting back close to 7% held. DAI is the big story. Look at how it's holding. The sharks and whales are now back to holding over 40% at 40.6%. If we go back to the last year, yeah, this is the most that sharks and whales have held in DAI in at least the past year, if I go back even further. So the last time sharks and whales held this much DAI was in December of 2020. That's a very big deal, a little over 2.5 year high. And then look at some others while we're here. True USD not doing much. Sharks and whales are pretty disinterested in this asset at the moment, but USDP, Paxos Standard, incredible upswing. And this is significant. If we isolate USDP and look at it compared to price, look at how they were increasing huge in early March, just prior to the big bottom or just prior to a huge rise in Bitcoin's price. So USDP was the biggest accumulator right before that pump. And then they were also a big accumulator over the first few weeks of July here in our current month. And no, prices have not really reacted to this increase as much because Tether is going down this time, whereas Tether was obviously going up alongside USDP in that March bump. But if you see USDP's line begin to turn around over the next week while USDP is being so heavily accumulated, yeah, that's a great sign. So keep an eye on that. Ethereum, sharks and whales, by the way, not really showing much indication of an accumulation at the moment. And then going back to social dominance, I wanted to bring this up. Bitcoin's percentage of discussions was quite high. You could see that when it's above this line, it generally leads to better returns for BTC. That's come back down a little bit. It's back toward neutral, especially with all the talk of XRP, Chainlink, and even meme coins today being a topic of conversation. That's taking away from the high amount of Bitcoin discussion that we're looking for. Okay. Sorry, guys. I'm definitely sniffly right now. Let's take a look at some assets now and start with the first recommended one, which was Stellar. Let's see here. Okay, so I do want to mention that Stellar is not an ERC20, so our metrics for this asset, currently ranked at 21, is a little bit more limited than our usual analysis that we can do for Bitcoin, Ethereum, Chainlink, and some of the other ERC20s out there. But that said, we see one giant anomaly right off the bat. XLM's trading volume beginning last week on the 13th exploded to over a billion XLM as price jumped from on the 12th to the peak on the 13th. Yeah, this was just a sweet little 62% pump there in one day. Then it came back down, and then we had this second run where it jumped up again over a 2-day span, another 40%. So since its bottom here on June 15th until where we're at now, it's more than doubled to plus 116%. So congrats for anyone that had been patiently holding Stellar back in mid-June. Over the past 5 weeks, you've been very handsomely rewarded. Trading volume still looks quite high. I'd say this isn't outside of normal for an asset that's been pumping the way XLM has. The question is whether it's contributing to further rise. And if we zoom in a little bit and we look at, something like a 1-hour candle, it does look like there was an increase going into the price jump on the 18th and 19th. The volume is not really increasing anymore ever since it topped out at the beginning of the day yesterday. But I do see that volume is still quite high. It hasn't just fallen all the way back down. So there are still a lot of very interested traders that are trying to push the price up further. We just need to be aware that if we had MVRV for Stellar, it would likely be heavily in the danger zone right now, because so many people, especially after this increase right here back on the 13th and 14th, they had FOMO'd in, and many actually earned even further profits. So 30-day MVRV would likely need to come down. I wouldn't be surprised if the price kind of stays flat in the 15 cents to 16 cents range, assuming Bitcoin doesn't do anything crazy. And once it stays flat for a period of time or even drops back down below 15 cents, that would be the time where you really can capitalize. So either wait for a week or so of flat price for XLM, or wait for a drop below 15 cents that is going to start causing FUD and people to drop out. That would be a time to get in. And we can combine that trading volume analysis with a bit of funding rate analysis, where we do see that on Binance, there's some pretty heavy shorting happening. That's a good sign. This likely had to do with why XLM didn't retrace more after it had that huge surge, and why it actually jumped back up a little bit. Now it's still being shorted now, which is great. I would be happier as an XLM trader if it really started to get super low like it was back on 20th. I don't think shorts have been liquidated. Many people may have just decided to chill out and not aggressively short like they were yesterday. But it's still good to see that it's in a red zone right now. We don't want to see people longing it. That would be an indication of greed and further make the argument that price will drop down even more so below 15 cents. Now, as I mentioned, the social aspect is very important for XLM right now. Social dominance, as you would expect, really was at its peak just as the price was topping. This is very normal. You saw a similar effect here on this pump back on July 13th, the first wave. Now, I mean, this is a perfect illustration of how great social dominance can be. The crowd gets super excited toward XLM, and the price immediately tops right afterwards within an hour. Happened on the 13th, happened on the 19th. Now social dominance is kind of calmed down. It's still higher than where it was in mid-July, so that's nice to see. But I would love to see it actually come back down to, after that first pump and even this weird wave here that happened on the 15th, you can see how social dominance was back down below 5% for most of the time here. And that helped to kind of make XLM get under the radar once again. And then social dominance exploded as the price had that second pump wave. So it's still a little high. Look for it to get below 0.4 or even 0.3% as a good sign that the mainstream crowd has moved on and they're paying attention to meme coins or something else once again. And then weighted sentiment, we can't really say much because of the Twitter API changes from a month and a half ago. Let's wait another couple of weeks, and then I'm going to start integrating weighted sentiment back into the analysis that I do on these calls. And then finally, if we want to look at development activity, going back 4 years or so, yeah, I mean, this is what you want to see in an asset. It is gaining more and more development activity over time. Clearly, I mean, maybe we could even do it as a bar. Yeah, I mean, this is a solid sign that the team at Stellar is not messing around, and they are trying to innovate and improve the asset more and more as time goes on. I love to see this, and I think that it's a sign of a dedicated team that, if nothing else, is not really showing any signs of a rug pull or an indication that they're giving up on the asset. Obviously, being the 21st market in crypto speaks for itself to an extent. And you can even look up one of our most popular articles that was ever written about 5 years ago, but still as relevant now as it was back then. If you see a rising development activity in a project, there are three things that we can deduce. One being, these people believe the project will be successful, the project is shipping more features, and there is, as I said, less probability of the asset being an exit scam that is about to rug pull you for all your money. So take that for what you will with XLM, and I really like to see the trajectory that it's been on over the past 4 years. All right, so now for the more complex analysis, let's see if we can look at it. If we do staked ETH here, we'll go back to just the past 6 months. So we're looking at staked ETH versus, or staked ETH on Lido versus staked ETH on the mainstream Ethereum blockchain. And let's see what we can find. I'm going to try to just like jump back and forth here. The Lido wrapped stake ETH price is at 21.48. The regular Lido staked ETH is at 18.91 right now. So there is an advantage there for the wrapped staked ETH. The transaction volume on regular staked ETH had a huge spike on the 20th. This was its largest spike in about 2 months. So I like the look of that for regular staked ETH. On the wrapped stake ETH side, not much is happening at all other than a big trading volume spike that happened about 4 weeks ago. Moving down here, the wrapped staked ETH had a big daily active address spike on the 11th through 14th and then calmed down. Circulation, some minor spikes, but nothing really special. Regular staked ETH, it was about the same. So it looks like these two, the daily active address spikes did happen in tandem for both. So utility-wise, there's no real big difference. MVRV ratio, if we just look at the Z-score, which is plenty good enough, we can see that it's showing some pretty decent undervaluation for right now. So that's a good sign for regular staked ETH. Whoops, that's interesting. And then if we go to wrapped staked ETH, doesn't look like do we have MVRV for wrapped staked ETH? I just want to check the non-intraday. We do. So we can say that the 30-day for wrapped staked ETH is right at even at the moment. Whereas if we go to regular staked ETH, yep, same thing. So neither one is showing a sign of being more overvalued or undervalued than the other. No real funding rate data for these kinds of assets, but we do have whale transactions for staked ETH showing that there is not much going on at the moment. The amount of $100,000 or more transactions has kind of dried up over the past, give or take, 2 to 3 weeks or so. And if we go back to wrapped staked ETH, a little more interesting. So the amount of $100,000 or more transactions are a bit more lively here. And the $1 million or more transactions, this is actually the most, yesterday was the most we've seen since mid-June, June 10th or so. So 6-week high here. I think there might be something to the wrapped staked ETH whales right now. And let's see if we can find out if there's some interesting accumulation happening. So if the price is currently at 2148, let's start looking at 100 to 1K, 1K to 10K. Let me zoom in a little bit, get rid of this anomaly over here. And we'll even do 10K to 100K. Yeah, so the largest here for wrapped staked ETH is actually accumulating quite rapidly. This is a very good sign, I would say, considering the whale transactions are up, like I said. So the millionaire holders of wrapped staked ETH, these are actually $10 million to about $100 million holders. They're at their highest level in quite some time. And the sharks aren't really far behind. They're kind of moving. I mean, other than the red line, the lighter yellow line is moving in the right direction. So I like the look of this a lot for wrapped staked ETH. I think it's a very good sign for it. Regular Lido staked ETH is looking decent, not quite as high. Especially the sharks, they're actually declining as opposed to the wrapped staked ETH that are increasing. We're still seeing the red line moving up, and the solid yellow line is kind of flat. So between the two assets, the wrapped staked ETH is looking like the better bet according to the key stakeholders. So that's pretty significant and probably the best argument we've seen for wrapped staked ETH being the better of the two at the moment. Not much special happening on the volume and profit to loss ratio. Pretty even. Mean dollar invested age. So this is going to be deceiving because staked ETH is always kind of seeing some weird movement with its dormant tokens because it's staked and constantly kind of intended to be sitting. If we just go back in time a little bit, let's go back to 2019. Yeah, so I mean, it's constantly moving down. Let's just see if there's any difference. The big swing down started in early May. If we look at wrapped staked ETH, moving in the other direction, I think there's something, I think these are just the functions of the assets and how they work differently. Wrapped staked ETH is likely going to stay put in addresses longer than regular staked ETH. So I don't want to put too much into that, especially because they go in kind of opposite directions. Network realized profit loss, we are seeing another big spike similar to what we saw on July 6th. So this would be a negative sign that we just saw a big wrapped staked ETH profit spike. They don't always indicate that the price is going to correct, right? Sometimes it might be a very short correction and then a big bounce. But let's see if it looks similar on the regular staked ETH side. Yeah, not really any big network realized profit spike. on the staked ETH side. So short-term wise, that's an advantage for the staked ETH. I still think the best indicator we've seen is the fact that whales are looking much more accumulaty. Let's pretend that's a word on the wrapped staked ETH side right now. Supply and exchanges for staked ETH. I would skip this one because staked ETH and wrapped staked ETH, the exchange supply is going to be very limited and kind of misleading. Let's look at just the last month of social dominance. Yeah, not much of anything. I'm not even going to look at wrapped staked ETH. It's going to be about the same. Weighted sentiment, normal. Development activity for staked ETH. I mean, I guess there's a little bit of relevance to this. It's about even over the past month. Let's look at the last year. Kind of coming down a little bit. And then wrapped staked ETH for comparison. We don't even have development activity. Yeah, I mean, there isn't going to be much to staked ETH or wrapped staked ETH in terms of their coding teams anyways. But yeah, I think moral of the story for the individual asking about this and for anyone else interested is that wrapped staked ETH is seeing some promising signs from its largest holders that are typically non-exchange holders. They are accumulating it a little more rapidly than regular staked ETH. So that would tell me, based on history, that it would be the better bet between the two. And I do hope that analysis helps. All right, that being said, we're pretty much right at about the hour. I appreciate the questions. It was awesome to look at both Stellar and staked ETH and wrapped staked ETH. Tune in next week, and of course, check out our analysis that we're continuing to post for the rest of today, a little bit through the weekend. And we're happy to answer questions on our Discord. Don't forget to check out our bot too. Our AI bot is continuing to get better and better, guys. So give it a look and let us know if you find any cool analysis that the bot may help you out with, just by asking it a question on why an asset is pumping or an asset's trending, or perhaps just some fundamental news that the AI bot kind of brings some of your attention to. But with all this said, thank you so much for joining today. On behalf of Balresh, on behalf of Maxim, who couldn't be here but will be here next week, wishing you all the best for the weekend, and thanks for joining today. Talk to y'all soon.